Hello everybody. In the current affairs this week, the week ended 17th of November 2024. TV channel CNBC TV 18 had this week organized Global Leadership Summit 2024. In this summit, the founder of Kotak Bank, Mr. Uday Kotak, talked about the strength of the US economy and its fallout on the balanced part of the world. He expressed the fear that on account of the strength of the US economy, the balanced part and the balanced part of the economy other than the US might become irrelevant. The strength, according to him, of the US economy is coming from three major reasons. The first being its military strength. US has been investing very heavily in building its military might since last several years. And today, its military strength is absolutely unparalleled. The second strength is the size of the US economy and its currency. The US dollar still continues to be the reserve currency for the world, and this gives major strength to this country. And the third and the most important strength of this economy has been the creativity and the innovation of US. Still, across the world, all the major innovations in any fields are coming from the US. So this strength of the US economy and now the policies to be pursued by the new administration which is going to take charge after the election results might make the balanced part of the world irrelevant. Let us see what happens in the times to come. But there is a lot of learning for India as to how to build its economy. And there are lessons which India as a democracy, like what is the US, which it can learn from. This week, Moody's ratings came out with the report that Indian GDP is all set to grow at 7.2% in the year 2024. This rate of GDP growth is amongst the highest in the top 20 economies of the world. But India needs to do a lot of catch up, and it needs to grow at this rate for at least 20 to 30 years to make itself a developed economy from being a developing economy or an underdeveloped economy. In the month of October, the FIIs were sellers in Indian stocks and buyers in the Chinese stocks. But in the month of November, this trend has reversed. FIIs are no longer very bullish on China. This week, the Hang Seng, which represents major Chinese stocks, was down by more than 6%. CLSA, a leading FII, has now made India overweight by 20% than whatever is its weightage in the MSCI Asia excluding Japan index. So for FIIs, when it comes to the emerging markets, India is now gaining its favorite position. The Indian stock markets, the global commodity markets and the US markets were all in a softer tone or a declining tone this week. Nifty 50 was down by 2.75%. Nifty mid cap was down by more than 5%. Nifty small cap was down by more than 6%. FIIs continued to be sellers to the extent of more than 9,000 crores, but domestic institutional investors, the DIIs, bought stocks to the extent of more than 12,000 crores. The three major sectors which were down by 6 to 7% were Nifty metals, Nifty PSU banks, and Nifty defense. The commodity markets internationally were also down. Crude, gold and silver, they were down by around 3 to 4%, and the downward trend across the week continued. Even the US markets, which rallied so very well after the results of the US elections, were down, and Nasdaq was down by more than 3%, and S&P 500 was down by more than 2%. One of the discussions which is going on everywhere in India is that are the Indian markets in a bearish trend? In order to find out in a little detail as to how the top 250 companies have performed on the stock markets since last 1 month, what we could figure out is that out of these top 250 companies, amongst the top 10 gainers, the gains have been in the range of 22 to 6%. So there has been companies which have been gaining in terms of its price appreciation so well. While as there are at least 10 companies where the price erosion has been to the extent of 29 to 24%. So if it was a bearish trend, then all the companies across would have been in a declining trend. But there are companies which have been appreciating, and there are companies which are declining. But the common thing which we could understand in this trend, which was our finding, was that performance is being rewarded, and the prices of stocks of companies where there is good performance, there is still price appreciation. And where the performance of a company is not in accordance with the expectation of the markets severely punish those underperformers. So, according to this trend, it is not a bearish trend, but a trend where performance is respected, or non-performance, non-performers are punished. Thank you. This is all for this week.